Good morning, everyone. Welcome to Monday. Welcome to Monday Minutes. Very strong risk-on move this morning with the news coming out of Pfizer, progress on the vaccine side. It's interesting. We talk about monetary contribution, monetary liquidity. We talk about fiscal liquidity. Some call it stimulus. In the end, the greatest form of stimulus right now for the U.S. economy, for the global economy, is clearly and certainly progress on the health side, progress on the vaccine side. We're seeing how markets react this morning very dramatically, including interest rates. Despite the election dynamics, which clearly do matter, we're not discounting that. We still continue to see the economy, the health side of the equation short term as paramount, as critical here. The economy doesn't stop for an election. It doesn't stop for an election recount. So with that, we look back to last week. We look at Friday's employment numbers, still very constructive, still moving in the right direction. Having said that, slowing. And this is something that's been in the marketplace now for the last couple of months. We look at some of the longer term unemployment numbers are certainly concerning, which tells us that time certainly does matter here. More specifically, we look at interest rates as well. Back to last week, we look at the election, pre-election position skewed toward one party domination into the night, 10-year yields trading in and around 95 basis points. Then slowly those positions coming off as it became apparent that one party domination was unlikely, gridlock more likely than not. 10-year yields last week trading in and around 74 basis points. We initiated shorts in and around those levels, respecting a 50 to 90 basis point range since June, but clearly writing to clients in the last 2 to 3 weeks about the consolidation toward the upper end of that range. Now, we didn't expect 10-year yields to get in and around 95 basis points this morning because of news on the vaccine side, but we did see the dynamics of the last couple of months coming out of the employment numbers into long-end treasury supply as one warranting higher interest rates. So with that, we do get supply this week in the form of threes, tens, and long bonds. And certainly, if we bring supply in and around these levels with a fairly decent concession built in since last week, unintended, obviously unexpected with regard to the Pfizer news, we would expect that the more rates back up from here, the better received these auctions will be as the week progresses. On the economic side, we get readings on CPI, we get readings on PPI, and certainly another claims number on Thursday. I'm Greg Faranello, head of U.S. rates for Amerivet Securities, wishing everyone a great week.